Welcome everyone to the Kendall Report. Sorry I'm late tonight. Actually had a power outage here and wiped out all the equipment. Everything kicked off, had to reboot and set up the entire studio, including all the monster behind me and everything. So I'm sorry for that. Not very competent utility company around here, let's just say. The only good news is nuclear powered, so we'll take that. Anyway, folks, welcome. Wow, really interesting living in Biden's world. I'm sorry, I've got some orders. I've got some orders in, and somebody was commenting about the buy the dippers. I bought that dip, and that's actually exits coming in.
Order filled.
Yeah, I bought a fair amount on looking for a little bounce. It's a scalp. Anyway, that's the Biden world that we live in. I'm sorry, I can't turn the sound off right now, so unfortunately we'll have to just put up with that for a minute. But the bottom line is that I think that this situation is very substantial. Listen, I'm not an expert on geopolitical stuff, but when this stuff comes in, it throws in so much uncertainty. And the reason this is even more exaggerated than other situations is you've got Joe Biden as the president. You've got absolutely people that aren't qualified in every second, every administrative of the, every secretary, the Treasury, you go all the way down there, absolutely buffoons running this thing, making decisions. So it's pretty scary. And Israel, I was alive and at least remember when Menachem Begin days in the 67, that's how old I am. Yes, I remember the 67 Israeli situation. And Israel has a tendency to respond very heavily, and that's what probably the most worrying here. And Biden's have nothing. He's got no leverage on anybody in Israel right now. And they're just not, there's a lot of people dead, folks. This is really sad. And, we just keep seeing the world falling apart in front of us. And it was just looking so good. What a crazy, awesome reversal we had on Friday. And I'm not sure that's over yet. And like I said, market came down to some key numbers I'll talk to you about here. And that's why I saw there's probably a pretty good chance of a scalp here. And we'll talk a little bit about that here in a few minutes. But I'm really, trying to get on just to say a few more things. I don't know what's going to be next. No one does. And there's certainly a lot of emotion around this. And I think that the turmoil isn't going to go away right away. We were set up, let's just get into talking a little bit about what is about to happen this week, just from, this back in the market stuff, right? Monday, there's nothing because it's Columbus Day. We also have a very weird day that this is happening on. This is the other thing. We're likely to see some illiquidity and very thin markets. It's pretty typical of a Columbus Day. And the banks are closed, the bonds are closed, all that kind of stuff. So it's going to be very interesting, I think, on Monday, just to deal with any news and things that might come out. The volatility could be really elevated just because of the situation and the thin markets. Amazing how this stuff happens right when you don't expect it to, but that's the way this type of situation is. But back into the economics, Wednesday is really the big day. There's a couple reports on Tuesday. No one really cares about either of those. But we get mortgage apps on Wednesday. No big deal, but they were down -6. I expect those are going to continue to start to flatten out here. And then also on Wednesday, we get PPI, expected to be at 0.4, the core at 0.2, and year over year is 1.6. And maybe some might call the Fed victory here. I'm not sure. It's going to be, like I said, it's going to be interesting as we come through this week. We're also seeing on Wednesday we get the FOMC minutes, and I'm not sure there's going to be any surprises out of that, but it certainly could be some things in there to look at to see what kind of talk was going on in the meeting from that standpoint. And then we come into Thursday. We got CPI expected to be 0.4. The core is expected to be 0.3. Year over year on CPI is 3.6. And that's probably going to stay elevated. Maybe we get some surprises here. Inflation starts to come back. But we saw, almost a 10% drop in oil last week. I know that was just last week, but there's just so many currents flowing here right now. And the way that the markets are situated technically will help us a lot in this situation, because if you're trying to put a fundamental or macro story together on this, it's got all muddled up here over the weekend with this beginning of this war. And it, like I said, I don't know how far it goes. I don't see how they're going to come into an easy resolution here, because I believe there will be further. I believe Israel will lash out pretty harshly. And, like I always say, you have to remember these guys are nuclear powered. We empowered them with this. So, there's a lot of scuttlebutt around Iran, and it goes on, folks. But back to the also we get claims on Thursday. We're looking at 217K continuing claims, 1.664 last week. That number just keeps coming in a little bit. I mean, we had crazy good numbers. Employment on Friday, 330, I think 336. I didn't write the numbers down, but really crazy numbers in this labor market. I did the video, I think it was last Tuesday, Wednesday night, not sure, just looking back, talking about the employment that won't quit. And boy, it really did. I thought, well, maybe because the ADP numbers came in a little soft, they meant nothing, as they usually do. Like I mentioned, I think in the video on Wednesday night, that they have been more correlated than lately, but they're just totally back to not correlated, right? So there's nothing there at all. And Friday, we come into Friday with U of M, University of Michigan, sentiment numbers expected to be around, forecasted to be 66.5. I'm not sure anyone's going to react to any of this. So I think it's going to be, as we go through this week, just to set the tone. I think the volatility on Monday with this war going on, I think everybody's sitting on the edge of the chair waiting to see what the real reaction is going to be from Israel. Like I said, I don't see that Biden or this current administration has any leverage whatsoever with these guys. They have not done anything to show that there's any reason to believe that they could do anything. I'm talking about the U.S. And influencing what's going to go on there. So, man, always a hot spot in the world. You think things have calmed down, and now we got two pots boiling on the planet. You got the Ukrainian situation, and now this, and more. It just seems like a crazy world we're in. So let's go ahead. Let's get into the database, which was, I think, very interesting. We'll see how everything plays out. But let's go ahead and get into the rest of the show. Oh, one last thing before I move on. Sorry about this. Earnings begins this week. There's not a lot. I didn't even write them down. There's about somewhere between 10 and 20 per day. Nothing really material. We'll get into that, not this week, but the following week. I remember I've been talking to you about, and it'll come up tonight, I'm sure, this second week of October is likely to be a point where we're going to have to watch really close, and that'll lead us right into the November 1st Fed meeting, and who knows what else we'll be dealing with by that time, as dynamic as everything is. So let's go ahead and get into the WaveTech database. All right, so as we start to look at the, this is the weekly breakdown here. Let me just bring that up just a little bit. One of the concerns I talked about, we were around 50%. I thought maybe we could, get really hammered after what felt like a fairly bad week, but it really wasn't. We actually had the S&P up 0.5. It's up 12.2% on the year. Nasdaq was up 1.6 last week. And then we have I think it's up 28.3 for the year, and the Russell down 2.2, and it's minus 0.9. So these markets are still having a pretty good year as we go. But the bottom line is we're not seeing a massive exit of the intermediate database. So that keeps me not bullish, but reasonably positive from the standpoint that we still have a chance to run this 200-day moving average to start to really see the markets stabilize right here. Like I said, who knows? Maybe there'll be some olive branch, but on this war situation. But yeah, I think it's very dynamic, and I think tomorrow could be a pretty crazy day from that standpoint. But the overall pattern here, 47.28 bullish on the weekly. We had 96 buys, 828 sells. So we did have some selling coming in. Let's flip this over to the daily here real quick. And we've got 11.37 now. We got down to 7 and change. So we got full liquidation mode happened. And the bottom line is that we're starting to see a little bit of traction come in. We got 447 buys, 91 sells for tomorrow's opening. Like I said, though, this thing over the weekend has really potentially put a wrench into this thing. We'll see how everything plays out. It's one of those things where we're likely to see more volatility than normal than we would have on this week we're coming into just because of this. So, and with the mini holiday on Monday, that isn't going to help anything from a liquidity standpoint. So markets are going to be able to get pushed around fairly easy. So let's go ahead and go right into the technicals on the S&P. Bear with me 1 second, please.
Order filled.
Okay, so here's the hourly chart, gap down right into some moving averages. It looks like we got a chance for a little bit of a bounce. We traded down at the low. We were down to 41.02, and then we've got a 19 high and a 02 low so far on the open. The algos are suggesting, at least on PPM1, that we get a little rebound for an hour or so, and then looking for pretty good decline into London tonight. There's some pretty substantial numbers out here. The only thing that's going to hold this together is right where we've almost been. The key numbers are going to be right at this 40 period moving average, and that is 42.94, so just below the 43 handle. After getting all the way up and printing some crazy numbers all the way up to 58.50 was the high on Friday. We got to this point, but we should see downward pressure, but we should hold that lower end. And there is a pivot. If you notice, there's these green dots right here. That number is, let me see if I can get that number for you. The number is 42.80. That's your downside trigger. If you take that out, then we go a lot lower. But that should also, for the moment, that would be the point where the market's stabilized. That would be probably the extreme. Let's go and take a look at the daily market grid numbers and get a feel for that. So we do have a downtick, but it looks like as we come into Tuesday, it looks like the algos are trying to turn back up just a little bit. I think this key number that I talked about the other night, it's always hard to see here, but there's some red dots right here, and that number is let me just get that number. It's 4382. I told you that's going to be the ceiling. That has been the highs where we've been stabilized right at the top. We bounced and ran up into this a couple weeks ago. Now what we're looking at is maybe getting into this wedge. We're trading down at the 10-period moving average right now, which is at 43.12. I just said we printed down to 43.02, so we're trading right now back at 10. And so we should try to stabilize back in here. But this downward 21-period moving average is going to be the big key. It's a minus 0.21 on PPM1, and it looks like it's not going to increase much. So that's going to be most likely your ceiling as we come in through the next several days. We'll go to the weekly chart because it's Sunday night and take a look at some of the intermediate trends. But at the moment, that 82 is going to be your extreme. We look at the market grid for today, overnight and Monday. We're looking S2 is 4303, and that was the number I was telling you. We traded down to the 02 level. We went right to S2, and that's what prompted me to look into to buy that dip there. That should be the bottom. Next level down though, S3 is that 4283, just above 4280 pivot I showed you, and that should be a key number to watch out for. That would be your ultimate extreme, and I think you still probably get a bounce out of here. PPM1 looks fairly good, just telling you that the 10-period moving average is trying to turn up, which tells you that we should start to maintain that value, and that value right now 43.12. So look for those R1, R2. R1 is 43.59. That's a big order from here. That's a huge rally. So we're looking at R1, S2, potential for a rebound out of here. We'll see what sets up, but that's really the range. Could expand down to, we've already been down to S2. Could expand to S3. It's one of those very uncertain days. The algo suggests this should be whatever we get out of today. Market should find some legs under it as we come into Tuesday and start to see some rebound back into this wedge formation that I talked to you folks a lot about. You got the downward slope 21, which should be the ceiling on this market here. And this 10 should be the floor. We should trade around this 10, especially if we do get a positive reaction. I'll talk about it tomorrow night when we come in. We'll be able to see that. All right, let's go to the weekly. I want to go back to daily for a second. I just wanted to show you that the algos are now suggesting that we're really just stabilizing. If you recall, we go back several days ago, we were getting a projection that looked like the markets were going to start to turn and start to rise. Now we're back into this one event here coming down like we have right now. We'll see how it trades the next day or so. But it does look like we're locking into this sideways range. Okay, now to the weekly. Weekly is continuing to suggest this. We've got really a negative PPM1, which is a minus 0.42. That angle of attack on the downside is going to be the ultimate ceiling here. That's 44.14, and that number that's a valid number for this week. That it would be a really big thing if we were able to get through there. We were able to get a bit of a reversal on a weekly. So we're trading right now, if we're looking at the weekly market grid, we're looking right now at S1 is 43.11, so we printed just below that. The next level down is 42.77. That's down toward that 42.80, that floor on that pivot I was showing you just a few minutes ago. So we could see 42.80 out of this volatility here. So don't think that that can't happen. And I'm pretty thrilled that played that reversal pretty good last week. I had a bunch of triple Qs, TQs that triple leverage, and I let them go on Friday's rally close to the close. That was, in hindsight, a really good idea. But because there's really, and this is what I was trying to set you folks up for last week, is there is no big rally or trend. I'm not bullish. This is really this neutral pattern. Now, the one thing that did happen on the weekly, we got the market grid to turn up on the upside, and on the downside, we still have some numbers here. Just trying to bring this in. We had 42.81 is fib target 1 on the downside, 41.72 and 41.05. You see these numbers down here, but the algos are suggesting that we're going to stay in the wedge, which is this area between the 40, that is 42.63, and on the upside, on the weekly, 44.14. That's your broad range of expectations. And I was talking about, we did see that dip last week, but we went right to the 40. We bounced off of it. That number's still valid right now. Like I said, that number, 42.63, that's a familiar number, right? How many times have we seen 42.30, 42.50, 42.63, and another number? That is the pattern that we're looking at, and I tell you, all this stuff could go out the window, folks, if we see some crazy stuff start to come out of the Middle East. And I think it's going to be, there's a lot of things I'd love to talk about. It's not appropriate. But the patterns are suggesting still this upward. We're going to go with the technicals, still saying everything's going to work out, and we're going to stay in this sideways range. So that's your broad range of expectations here. The fibs suggest that we can get down a little bit lower, but if we just look at market grid, S3 for this week, 42.43, R1, 43.71. That would be just a little bit higher than where we got last week. Makes sense. We'll probably see maybe an S2, R1 this week. There's really not any material news coming out, and there's no earnings other than this war situation. That's about all of the backdrop that we're really going to get. Well, I shouldn't say that, because we have the CPI and PPI coming out as well. So it's going to be an interesting one, folks. I'm sitting here right now trying to set up this week, and I'm still leaning to those trading within these numbers that I'm mentioning here. I don't see anything big on the downside or upside, more of pinned in this range that I'm talking about here. So I think it was 44.40 and then 42.80. That's your broad range. Not expecting to see the 44 handle, but I'm just telling you these numbers, 43.80, 43.70, and then right at just above 4,400. And on the downside, we've got it really well defined as well. Just trying to set this up for you. 42.63, 42.60 has been a gold mine, folks. It's been down in that range. Every time it gets down there, we've managed to print up above that level. I mean, if I go back to the daily chart here for just a minute, the low on Friday was 42.42. Okay, we keep seeing these crazy bounces out of here. So the weekly charts just keep telling us. I think we need to get a close. I didn't say this, but let me summarize the S&P here as we come in. We need to get a close, probably higher than what we were on Friday. If I go back to the daily charts here again, to confirm that reversal, because you got basically an outside reversal going on. To confirm it, we need a higher close, and that's a pretty big number right now. That's at 43.41 is where we went out. So that's a 40 handle rally. Certainly is possible. Yeah, it just expect a lot of volatility. I think I laid out the ranges. I wouldn't get in. I think that everything's capped off around those levels, that range that I set up. You should be good to go. Let's go ahead and get into the Nasdaq. All right, so here's the Nasdaq daily. We do have, it's interesting because a couple of sessions ago, we go all the way back to the October 4th, the WaveTech Fibonacci tool was projecting, had three projections, had fib target 1, 15,148, talked about it a whole lot, and then there was 15,363 was the next level. That's up there. And if you look at the market grid on the daily Nasdaq, total difference from the E-minis, because what we're looking at here is this is the leader of the market here right now. You can talk all day long about the big tech stocks and the Magnificent Seven being overdone and valuations all out of whack. Meanwhile, this market just continues to overperform, even though all we've done, and if we go all the way back to the August lows, we've rallied up and we've retested those lows, and the pattern that is out there is pretty substantial. I remember talking to you, these three dots down here, this was going to be an island projection on the Nasdaq. I didn't think, because of the algos were projecting that we'd see, if we come all the way back, if I ran the look back algorithm on TradingView, we'd be able to see that when we were over here on October 2nd, it was forecasting that this next week would be the low, and then we would turn up. That's what happened. The low was on October 4th, and then it's still forecasting after this week to be sideways. It's still suggesting that we're going to see a higher forecast, to the point where we're going to see the PPM1 get into trend mode. And if you look at this is daily here, all of the algos on the daily chart here all are pointing to an expanding movement to the upside. So all of a sudden, it looks like a couple of things can happen. Now I just mentioned that fib target 1, 15,148. The high on Friday was 15,160. So we've satisfied fib target 1. Fib target 2 is still in play and still valid, 15,363, then 15,5. I just rounded off. And if we look at the market grid, you can see 15,394 is R3. RXT is 15,481. And that's in the expectations for today, Monday, right? So the downside would be probably the 10-period moving average, 14,878. And we're looking, that would be somewhere to an S3 print. So far, what we've had is much different look. The low has been 14,494, just below S1. 14,927 is S2. Looks like, yeah, we're just a little bit above that. We're 14,991. So we've almost printed an S2. And I would suspect, just like with the S&P, if we could close higher, that higher close today is 15,112. Close over 15,112, then all of a sudden we've got a confirmation reversal, and we're seeing at least the market rallying all the way into Friday the 13th of this week. So that's going to be interesting, whether or not this whole thing, maybe somehow this war stops affecting. I think if it hadn't been for the war right now, we would see a decent bid in the market right now. I think Friday's action was very impressive. I think the macro numbers that are coming out of the economy are very impressive. So I just don't see the downside unless we get some really serious issues going on with this war and this whole situation in Israel. That's just going to be what it's about for right now until we can get into Tuesday PPI and CPI on Wednesday. So that's all there it's all about right now. But the upward slope here, let's go to the weekly chart, Sunday. Now the weekly chart is not there's a bit of a resistance right at the level here. So this is why it's always good to go look at this. So there's some pretty good resistance right here at the 10-period moving average 15,108. It's actually negative, but it's showing it's turned up, which suggests we could get some more upside, but we got some weekly downward projections here, which would be 14,266, 13,711. So I think this is somewhat interesting. This would suggest to me just that we go to the minimum numbers here on the upside, whether we can print up. If we close higher, then there's a little higher probability to get back above these levels. But this 15,108, we're looking at PPM 1 on a weekly basis, a minus 0.22. So it's right at trend level down. So there's some downward pressure here. And we have some new fib targets on the downside. And I would just have to go with the weekly analysis. So I know we were just looking at the daily charts and they were not bullish, but look like there's some upside. And I think that's still valid. But the weeklies are very mixed here. The PPM1 is suggesting, this goes to what I was talking about earlier, that second to third week of October is where we're looking like we're going to turn down. And then all of the algos are suggesting that the weekly trends are going to get more negative. And then we've got new fib targets out here. We'll just call 14,266 as fib target 1, which was similar to the previous targets. That fib target 3 was 14,212, so very similar. All right, so let's go ahead and move on to the Russell. Okay, folks, so on the Russell, this is the weekly. We'll kind of go top down here. And the weekly is, let me go to our RUT. I want to go to the cash because the algos aren't calculating here. Here we go. So the algos on the Russell are suggesting this is going to be probably the bottom week or the extreme that we're at. We almost went to this fib target here. We're looking at fib target 1, 1701. 1709 is the low print here. So we're right at the extreme, and probably depending on what kind of action we get over the next couple of days, we could trade back into this range, but we have steep downward angle of attack on the 10-period moving average, 1.25. This is a weekly chart, cash Russell, okay? And what we're looking at here, that's going to be 1852 is extreme. If we just look at the 1796 is R1, 1810 R2. Looks like there's tons of resistance at these levels. So I would just expect to see this market trade back into the market grid. We actually dip below it here on the weekly. Let's take a look at the daily real quick. And I'm going to go back to RTY now because there'll be enough data so we can get RTY. Still got a couple of days down into Thursday. It looks like we could get a possibility of at least a potential for the market to try to flatten out and challenge the 10-period moving average. But the simple 10 is going to be where the resistance is at 1767. That's going to be your ceiling. There's not a lot here, folks. And we're suggesting that if we can get, the algos are suggesting we can trade back into these moving averages. But this potentially would be a bottom. But for right now, it's really just a retracement rally, a relief rally to the upside if we even get one. I think there's going to be a ton of resistance for a number of days above this market. Between the 10-period moving average of 21s at 1805, you're going to have a hard time getting back over 1800. And this is back to the E-mini futures on the Russell. All right, so we'll go to the Treasuries. This is a weekly 10 Treasury. Talking about this angle of attack here. Looks like we're just going to continue to climb higher in yields. And I think that the big dilemma here is, folks, that there's still people out there that think that the interest rates aren't priced into the economy, and they are to a large degree. And we're starting to see finally the housing market to get a further hit. There's been a lot of this build to rent kind of trades going on in the building industry, and they're finally hitting, I think, some kind of max there. And so, but while there is an effect of the interest rates, for the most part, everything's kind of built in. And I've been arguing for a while that we've normalized the interest rate market, and I believe the average 10-year, I forget how far you go back, but it's like 5%. You know, I've been telling you folks going back when they started raising rates that they wanted this rates to normalize, and that's exactly what's happened. We're sitting here. There could be another buck in this on this yield. We could see 450, 460 on the 10. I've been talking about this kind of broken record, but just to talk about it just a touch more, it looks like we've got all the way to year end. It looks like we've got upward pressure on yields. I don't see anything changing there. Meanwhile, employment stays strong. Everything that we know, the backdrop of the macroeconomics really isn't changing, even though people are telling you that it is. Those same people are the ones that told you in January that this was going to be a problem. There was going to be a complete recession and that the markets would collapse. Well, I just told you, with the Nasdaq right now up 28.3, doesn't sound like a collapse. S&P up 12.2, which is a very respectable year. And of course, Russell is just it's just zombie company. There's so many zombies laying around in that world between the banks and other things that are out there. It's just very difficult to get excited about anything there. But, you know, let's face it, the S&P and Nasdaq has had a really good year in spite of, look at this thing. We're going back. Let's move this over to a weekly chart just so we get a little more perspective. I mean, this is April with the 10-year at 3.2. Okay, so we're up $1.50 on the yields, and still not seeing any effect. And you can even go back over to October of last year when we were at, roughly 4%. We dipped down, and then this rally. And you can see here on the weekly, folks, this angle of attack is just like ongoing. We don't even see a break until November, even on the intermediate charts from that standpoint. So it's just not going to stop rising here. Let's go over and take a look at the 2-year. And I think if you're looking at the yield curve, hang on, I hit the wrong one. So this is the 2-year. See the different slope, and when we look at the 10, it's just a steady slope up. I need to get a graphic and just overlay these so you can actually see what I'm talking about here. But this is actually it's kind of rolling. It's still got a slight rise, but it's much shallower than the angle of attack in the 10. So I've been talking about this where the yield curve on the back end is just going to continue to come up. And I know there's still people out there. And I was in this crowd back in 22 that I thought the Fed was just going to keep raising until they broke something. And oddly enough, everybody has readjusted a lot as far as yields go and in their businesses. There are some dislocations that have occurred. I mean, what is this, folks? It's October, okay? They, whoever they are, but the media, and if you turn on CNBC and Bloomberg, they have been telling you about the credit crunch and how CRE, the commercial real estate, was going to be a disaster by now, and all on and on and on. None of that's the case. Now, I've been telling you the opposite, that, you know, especially in the CRE stuff, that the people that hold that stuff, folks, they got deep pockets. You know, it's like trying to bet against CalPERS, which is the teachers' pension in California. I mean, these people are so big, they don't need to move on anything, so they can wait out stuff and not have to realize. And they trade. It's like trading cards. They might trade one for, hey, I'll give you two of these for one of those. And you know, there is sort of a trend going back to being in an office. I was just down in Phoenix yesterday for a football game, and just being down there's some new buildings going up. So why in the heck are they building these new buildings down in Tempe right now if this is a bad market? Why would you build new if there's so much out there? And it's interesting because I miss the days of being in those buildings and working in there. It was one of my favorite time in life, and being around exchanges and big offices and trading rooms. I miss that stuff. But, you know, this is just telling you that everything has normalized. And I've been saying this, if you go to the front end, the Fed funds, the 13-week T-bills, 1-year T-bill, all of that stuff is going to stay elevated relative to the Fed policies, and where they're holding rates around 5.25 to 5.5 right now. And the rest of this stuff is still floating. So I would look at the yield curve from the 2, 5, 10, and 30s. And when you look at it at that level, you can see this thing I'm talking about here, where you're starting to see the back end of the curve continuing to climb very slightly, but it's on that angle of attack. The 2-year is also rising, but at a slower rate. So we should see this start to flow together. And if anything happens, we see any downticks, you'll see it primarily in that 2-year, a little bit in the 5, but the 10 and the 30 are going to hang in out there. And that's continues to be my expectation. All right, so off the crude oil, weekly crude, got a STX buy signal weekly. The bottom STX was 85.65. We closed 82.79. So theoretically, we should be higher. We are higher. We're looking at a little bit of a bid with this situation going on in Israel, but the algos are suggesting this is a weekly, that we get about 2 weeks up, 3 weeks, possibly into the end of the month. And so we should stay right at this 10-period moving average. And this is, of everything you folks watch every day, this is exactly my point. This is the theory that I developed going all the way back into 1983 when WaveTech was actually developed, is this angle of attack tells you that we're at ppm value 0.38. That tells you there is a very high probability, like 60% probability, to hover and move along that 10-period moving average. And typically, the low end of the values will be that. Now, we had, I would call it an aberration on Friday, where we got just this massive selling coming into crude. We're able to print down below that STX number. Now we get at least 1 to 2 weeks sideways, and most likely what we'll see, not this week, but as we come into next week, we can see this market grid turn up, and then we get a little upward slope here, and it looks to me, going out for a couple 2 to 3 weeks, that we're going to maintain some decent upward slope in the angle of attack. If you go to ppm2, it's right now at a 0.87, and ppm3 0.39. These are all trend levels. So on an intermediate level, crude oil is still in an uptrend, and at least the minimum support here should be for the market to hold right around this 10-period moving average, and it should climb that little angle that you see here right now. Let's go to the daily, just see what the daily looks like, and you can see we did manage to get a little bit of a move. We're already trading RTX today. So RTX today is 86.12, the high is 86.48, so we've already printed up there. We do have an upward pivot number here as well. 88.85 should be the ceiling, and we should start to see over the next day or so where maybe this 40 is still in trend mode, which it is. It's up 0.33, and ppm2 is 0.22, so we should start to climb back into this moving average cluster in here and get into that little wedge and that upward 40. This is almost how Bitcoin has been doing on a weekly, where we're climbing along that slope of the 40, which is very similar to, if I go over, this is daily, this is a pretty significant number here from that, having that angle of attack at it's 0.08 on the 3, but ppm2 is slightly negative, and then ppm 1 is also down. So, but on a weekly, it's the opposite. So we should climb into this level here. All right, got a pretty decent bounce off the lows. This will make Peter Schiff happy. So we finally found that low. It was right down at that level I've been talking about. We were printing down to 1831. I've been talking about, I believe, 1826 down to 1818 levels on a weekly chart. The algos were projecting that we would turn up. We got the reversal. Still got a little bit of a bid going here in gold, and that's likely to continue for, I would say, until into next week. So we do have a pivot right above this number here, and this will be key. So watch this number. At 1905 is going to be that big number. So far we've had a 1896. Let me get that number. It's 1874 is that number. And if you get above that, then you're going to rally into the 21. You probably get 3, maybe as many as 5 days up into this pattern till we hit this 21. And this is daily, so it's declining every day. And so we're looking at that value right now, about $3 per day. So up around 1880, 1890 is where things are likely to really get to the point of where we're going to see resistance. But that number, that pivot number, will be the key to watch. 1874. If we get above that, let me just look, because I want to make sure I'm giving you the right value. Yeah, 1874. That's your magic number. That's probably a ceiling for right now if we do trade up there. But we break through it, and we're heading all the way up into towards 1890 handle somewhere in there, and I'll cover that as we go day to day. All right, folks, final market Bitcoin. As we still a slight angle of attack, this is a daily Bitcoin. We do have some fib targets on the upside. Looks like a little potential, some weakness, but really just coming back into these rising averages here. There's not a lot to look at here. We're looking at PPM1 is at a 0.33, which tells us that the 10-period moving average should hold here. From a valuation standpoint, that's 27,589, and as long as we hold above there, we should see continue to climb up. We get very close to fib target 1, which was the 28,543. We printed 28,301, so very close to that, and it still looks to me like we should continue up this angle of attack here. But this is the chart you want to pay attention to, and basically what I was referencing on the crude oil, that we have this upward slope of the 40-week moving average. That value right now is at the 26,576. This chart will update here at midnight, and we'll kick off another bar when we come in tomorrow, but we should have that angle of attack. We've got, just looking at this number here, yeah, we got about a 200 per week upward slope, so we're at 26,570, so just call it 26,750 range should be the bottom end, but we're looking like we're going to get some decent upward slope here as we come through the weeks to come. I don't know, is this related to the war, or maybe cash moving around into a safer place? Who knows? But it says basically a steady climb, and then ultimately, as we come into maybe around February of next year, we hit some peak values here. And the fib targets right now, fib target 1 is 36,222, 40,006, and 43,008. Those are pretty good looking numbers here. And it looks like this is one of those projections. As long as we stay, I'll give you a number, as long as right now we'd have to penetrate through like 19,500 to negate this pattern. I think it stays intact. There's another key number here at 24,750. Took that out from this range. It might be an issue, but I think this pattern that's being projected here, looks like we've got a pretty decent run for maybe, let's just say through the fourth quarter, maybe into a beginning of next year. So this pattern overall looks pretty decent from my viewpoint, just how it starts to evolve into slightly higher prices. And really, if we go all the way back to March of this year, we've just had this steady sideways consolidation, and now everything is starting to really formulate into some kind of upward trend. Okay, folks, that's going to do it for tonight. Sorry for the late start. Weather shut me down. I had no electricity. So anyway, appreciate it. I'll be here same time tomorrow night. Have a good day trading. I think it's going to be an interesting one, even though it's a semi-holiday where the banks and the bonds are closed. But good luck, everyone. I think it's going to get really interesting. I'll try to, if I have some time, I've got a couple of key meetings tomorrow I have to deal with, but if I have time, I'll try to put some things out on Twitter. So thanks again for watching. Appreciate it. And I will talk to you tomorrow night, 6 p.m. Eastern. See you then. Yeah, hit the like button before you leave.